listen to me, okay? And I know there's people in here that are teaching other people, even have YouTube channels, and they don't use stop losses, and they try to justify why they don't use a stop loss. There is no justification for it. Zero. Learn how to mitigate risk, then go back to teaching. Because if you're not using a stop loss, you are gambling. And the only thing you're teaching other people is, guess what? You're Nostradamus. You know what the market's going to do. Think about it. If you're saying that you don't need to put a stop loss in because you know where you're going to get out when your trade's wrong, what happens when it reprices aggressively? And you didn't expect that repricing occur so aggressively. And it moves way beyond what your safe exit point would have been or what you're willing to lose. You're crushed. And if anybody's watched you trade that way, which conveniently they never let anyone see that, those individuals are learning to do that very thing in their own trading. Now, is that, in my opinion, and I think you would agree too, is that the right kind of leadership and or mentor or teacher when it comes to risking money? I would humbly submit no. Because what they're doing is trading by itself is already inequity. And you have to have a way to control yourself. You have to control how much you risk, your leverage, the amount of money per trade, how much of a stop loss you're going to allow in terms of points or pips. You have to place a limit on that. What days of the week are you going to trade? Are you going to trade any old time? I teach what? A kill zone. And we're shortened. We want to see it go up first. That's what institutional traders do. They have mechanisms. They have to wait for the market to have an uptick before they can go short. So I adopted that with my perspective and price. I need to see what first. It needs to go higher. Okay, so where does it need to go to? Above some measure of equilibrium. So I'm having all these rules and these control mechanisms placed in my logic because it's an algorithm that's pricing these markets and it's booking them. And they have what? Control mechanisms, filters. So I'm aligning myself with an algorithmic principle-oriented trading model. But if you are teaching, or if you're learning from someone that's not using a stop loss and preaches they don't need to use a stop loss because they know where they're going to get out, what they're saying is they know what the market's going to do. Absolutely. So therefore, they don't need a stop loss. That is the definition of arrogance. I am not arrogant. I'm confident. Probably sometimes too blisteringly confident for some. But I do have limitations. And to teach or to illustrate trading without a stop loss, there is no other way to say it, folks. This is the way it is. Those individuals that are doing that are saying they know what the market's going to do. Now, they may say it and believe it, but that's not true. I don't know what the market's going to do. I have to use a stop loss. I know it's likely to do this or that, but I have to use a stop loss. Why? Because I'm human. I may have done something wrong. I may have shirked a rule of engagement, bent the rules a little bit. I've done that in the past. I'm human. Sometimes I think, this looks like it's trying to do this. I want to do that, but it looks like it's doing this. And I'll just toss in something small. But I'm using a stop loss. Why? Because I don't know what the manual side of intervention is going to do. And nobody knows that. That's the risk that is always in the offing. You have to have that that awareness of that potentially harming you. And if you're learning from someone, or if you're trying to do this without using a stop loss, what you're saying is you have no boundaries. That means whatever the market wants to do to you, you're inviting it. Now, there are times when manual intervention comes in and a major repricing in the market asset takes place, and your stop loss necessarily will be of no protection to you. And what does that mean? You might have a 20 handle stop loss on your index futures trade. Now, I'm not arguing or making the case that 20 handles is the appropriate size, but let's just say for the discussion here, say you have 20 points, okay? and the market has some kind of major announcement comes out, or someone gets bombed. Boom, the market just gaps. 40 handles. Think you can't do that? Stick around, because you're going to see stuff like that real soon. But what happens with your stop loss? Does the market and the broker say, hey, Jane had her stop loss at 42.50. Okay. But it gapped 43.10. Oh, it can't move like that. Either direction, it can do that. No problem, given the right circumstance. They're not going to go back and say, okay, Jane's stop was at 50, so we're going to honor that and get her out, and we're going to mark to market in her case on that understanding. They're not going to do that, folks. They're not going to do it. So, yes, you need a stop loss. Yes, sometimes your stop loss doesn't give you the protection that you hold true that it would likely give you. That's the underlying risk. That's why this is not meant for everyone. And for some of you, you're probably thinking, man, this is something I didn't really think about this. I don't think I can do this. Guess what? That's probably true. And maybe I've saved you a lot of hardship and monetary loss, because you probably wouldn't learn until you lost a lot of money that you probably can't do this. But for those individuals that know that you've been bitten by the bug and you're not going to take no for an answer, you have to use a stop loss, because it's a rule of engagement. You have to have it. You don't know what that market's going to do. You don't know how far they're going to take it against your idea. And believe me, when I was a 20-year-old, I arm wrestled, and I would pretend I was using a stop loss. I was like, okay, if it goes down here, I'm going to get out of that. And then all of a sudden it would start going towards it. And then say, okay, well, really, I'm willing to take a little bit bigger risk. I'll sit through 10 more cents in a move in soybeans against me, more than I would have. And the stop loss is not in the market yet. It's just open. I have a target I'm trying to get to, but I don't have a stop loss in. If you want to push it in, because that's what you're essentially doing. And that may sound crude, but that's exactly what it is. If you give the market the opportunity to abuse you, it will gladly do so repeatedly. Don't believe it? Lose and go back in again. Lose and go back in again. It's not going to feel sorry for you. It's not going to feel sorry that you didn't put a stop loss in and limit the amount of money that you're going to lose or could have lost. It's going to punish you. That's what it's there for. It's not here for your entertainment. It's not here for you to get better in terms of financial living. It's not for you. This is war. And you have to treat it as such. When people go out to battle, nation against nation, are they walking out there with wife beaters on and shorts and flip-flops? Hell no. They're going out there with helmets, plates. They're trying to get behind barriers like tanks and things that fortify themselves from, enemy fire, because there's a risk. So if you're out there trying to do things and you don't have control mechanisms and measures in place, when should you do something? When shouldn't you do something? Applies to a stop loss. I'm willing to take a loss if it goes here, but if it goes here and beyond, I'm probably wrong. That's what everybody without a stop loss is avoiding. That notion of being wrong. And being wrong, folks, you got to warm up to the idea. That's the best thing to know in this industry. Are you wrong? Are you wrong about your idea or your outlook on the marketplace? Because if you are wrong, you're going to want to know it, because you're not going to keep throwing good money after bad. And as a young man at 20 years old, I didn't know that. I learned it painfully and very expensively, but I did learn it. These are the discussions that none of the young hotshots that want to come here teach me an order block. Teach me an order block. Just give me the bias. Those individuals, and you know who you are listening, you're never going to learn how to do this as long as you hold on to those mindsets and think that's all it is. There is so much more that's going to be in your way. And you have not been here long enough, not under me, but in the markets long enough to discern where these things are going to creep up into your development, your trading. And everybody endures it. You're not going to be the guy or gal that just tap dances around these barriers, these pitfalls, these snares. You're going to put your head in a noose just like everybody else does and hang themselves. But I'm telling you, you don't have to do those things to learn the lesson. Learn from my mistakes. Learn from the fact that I lost fortunes doing stupid stuff, stupid things. And it's not shameful for me to admit these things. I would want to learn from someone that's open and honest. This is how I screwed up in the past. And I lost lots of money. And I believe these things that are out there, they're still being promoted by books and authors and things. And it's garbage because they only talk about this is what you can make. This is the pattern that works. And they fixate on those positive outcomes and not nearly enough on the things that are going to hurt you.